Okay, hi everyone, welcome to today's webinar. So for today's session, we are going to be talking about our pre-market live analysis. Okay, we'll give about 1 more minute to let more people join our session before we get started. In the meantime, you can let me know in the chat if you guys have any requests for any charts that you'd like me to go through. Also, let me know in the chat if you guys can hear me and of course can see my screen. Okay, let's go ahead and get started. So as per usual, a disclaimer and risk warning: trading forex and CFDs carries a high level of risk to your capital, and you should only trade with capital or with money that you can afford to lose. Trading forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Okay, so here's our agenda for today. So I'm Melanie and I'll be your speaker for today. I'm an investment analyst at Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021, specializing in technical analysis with a focus on Fibonacci retracements, extensions, and projections. Okay, now without further ado, let's go ahead and get started. Let me just pull out our charts. Okay, so before we start, okay, good. Everyone can hear me clearly. That's great. So I'll just quickly run through the events for this coming week. This is just our economic calendar for this coming week. And then this is on forexfactory.com, but of course there are many economic calendars out there on the market that you can use. So starting off, I have it filtered to focus mainly on the medium to high impact events, which are the orange and red icons that you see on the screen. You can, of course, also look at the lower impact events, which are these yellow icons. Feel free to filter out any events or currencies that you're not currently looking at. We just prefer to look at all of them. But you can see if you look at the low impact events as well, there are a lot more events to cover for each week. So that's why we just prefer to focus on the medium to higher impact events. Okay, so today on Monday, we don't have any major events. Tomorrow, we have FOMC member Wallace speaking in the US. We also have claimant count change in the UK, average earnings index, 3-month year um, data. Eurozone, we have German ZEW economic sentiment, Canadian CPI data. So all these are inflationary data. So it's pretty high impact on our Canadian markets. We also have US Empire State Manufacturing Index, China's GDP, industrial production, and retail sales data. UK's CPI expected to drop slightly to 2.7%. We also have US core retail sales data, Canadian monetary policy report, rate statement, overnight rate, and press conference. Next on Thursday, we have Fed Chair Powell speaking, Kiwi CPI data, Aussie employment change, unemployment rate, Euro's main refinancing rate, monetary policy statement, US unemployment claims, Philly Fed manufacturing index, Euro's ECB press conference, and on Friday we have Good Friday. So we have Kiwi, Australia, Swiss, Euro, UK, and Canadian bank holidays. Okay, now let me just really quickly pull out my charts and then we can get started. Okay, just give me 1 second. Not sure why it's not showing up on my screen. Okay, should be all right now. Okay, it's fine. We'll just deal with this for now. So let's start off with one of the requests in our chat. Yep, we can start with dollar franc. Okay, I'm pretty sure you guys should be able to see my charts now, but let me know if you guys can't see anything on the screen. Okay, so starting off, I'd prefer to start by looking at our higher time frames so that we get an idea of the general direction that prices are headed towards. So on our weekly time frame, we can see prices dropping quite significantly. And this is on our dollar franc once again. Now on our daily time frame, prices are continuing to fall. Okay, I'll place my first resistance up here. Okay, now because where we're looking at right now, where price is currently at, we don't have any lower, any swing lows for reference, actually. Okay, you can use this as well. You can use this area here for reference. It is a little bit far back, um, but yeah, this works too. Um, but I'm actually gonna go in with our Fibonacci levels now. Um, so I'll firstly be going in with our inverted Nike tick or Fibonacci extension. Okay, and you can see that our 161, or rather our first support lines up really nicely with this 138. I will also place a second support at our 161. So we'll just keep the 138 and 161. And I'll also be going in with our Fibonacci projection. Okay, so I'll keep that 161 level as well, in line with that second support. Okay, so for these two Fibonacci methods, if you're not familiar with Fibonacci, let me just show you really quickly how we um look for these Fibonacci techniques when we are charting. So to start with, the inverted Nike tick that I mentioned, it's something like this. So just an upright one will look like that, inverted will look like this. Okay, and we're basically looking at the levels that are greater than 100%. So we found that the 138 as well as the 161 lined up nicely with our support levels. Okay, and we also identified Fibonacci projection over here. So for this, we are looking more for this kind of a lightning bolt or zigzag kind of shape. So for this, the shape that we are using looks like that. And we're using this tool, the extension tool, which allows you to connect 3 points on your chart. And you're basically connecting the first 3 points when you're using this chart, this charting technique. Okay. I'm also gonna use a Fibonacci projection here. Okay, and you can see my 161 and 67 line up nicely. Okay, this is a bigger Fibonacci chart. Mm, okay, I'm also going in with a Fibonacci expansion here. Okay, and my minus 27 lines up with our second support, so I'll keep that as well. So the minus levels, so what I just did here, works well with these lightning bolt shapes as well. And for this method, we're looking at the levels that are in their negatives. So namely the minus 27 and also the minus 61. Okay. Now, let's go in with some indicators to support our analysis. So here you can see we have quite a big confluence area at our second support here. So confluence areas are basically when two or more Fibonacci levels line up in that same area. Prices tend to be attracted to this area but may not be able to push past it. So that's why it's important for us to be able to identify them. So I'm expecting prices to continue pushing downwards, although here at our first support, we also have a bit of a support level, quite a big support level at this first support here. So we could see a bit of a bounce off of this first support, but ultimately I'm expecting it to continue to um move in this descending trend. So let's take a look at our indicators and see what the signals are. To start off, I like to look at Ichimoku and MACD because at one glance you can tell exactly what the signals are. Okay, so with Ichimoku, prices are moving below the cloud, so that's giving us a bearish signal. With MACD, you can see that it's also giving us a bearish signal here. So that's fine. That all supports our analysis. Let's also look at our EMA, SMA, and Bollinger Bands. Okay, so but on our Bollinger Bands, you can see quite clearly that prices are pushing below that lower band, and we've recently seen what is known as a Bollinger Squeeze happening over here, and where prices were pushing really closely together and then broke below. Okay, so I'm expecting it to continue in this trend. EMA and SMA, you can see prices are also moving below both of these indicators, so that is fine as well. Now let's look at our RSI and our stochastic. Okay, so on our RSI, you can see prices quite obviously moving in this descending trend line. I don't think stochastic. Okay, stochastic is also moving in a descending trend line here. Excuse me. Okay, so that also is giving us a bearish signal here, so they both support our analysis. Okay, so to reiterate, I do think there might be a bit of resistance at the support level here. So when it continues downwards, it might reverse up slightly. There might be a bit of a bounce up before it continues in that downtrend towards our second support. Okay, so don't be too surprised. Make sure that there is enough leeway from your stop loss and your first support there. Okay, any questions? Okay, great. If there's no questions, we'll move on to the next request. Um, just give me 1 second. Let me. Okay, this is a much clearer screen now. I finally managed to get it up. Okay. Mm, okay, so next, let's go ahead and look at mm, let's look at dollar yen. Okay, yeah, we can look at US 100. Let's look at dollar yen first. Let's do a couple more um currency pairs, and then we can go ahead and look at our stocks and indexes. Okay, so dollar yen, same thing. I'm gonna start with our weekly time frame first, and you can see it's generally quite um bearish as well. Now on our daily time frame, okay, this is not really a valid trend line because there's only two touches on it. Even though we can definitely see there is a downtrend happening here on our daily time frame. So the same thing, I'm gonna go in with our support and resistance levels first. So I'll place my first resistance here and my first support just over here. Okay, second support here. So again, I'm going in with my Fibonacci levels. Okay, you can see that 78 lines up nicely with our first support. I'm actually also gonna keep this 100 because it's quite close to our second support. And when it comes to confluence areas, we're looking more so for areas, not so much specific levels. So it's okay if your levels are slightly further apart from where you've identified um, your support and resistance. Um, okay, I'm gonna go in with our Nike tape. Okay, I'm gonna keep that 161. So again, your Nike tick is inverted over here. And let's see if we have any other levels. I think I might go in with a retracement over here. Just a simple Fibonacci retracement here. Okay, and here we are looking, yep, so 61.8 lines up nicely. Even though this 50% does line up with our first resistance, but price, you can see, is already broken out of that level, so we can't use that anymore. Whereas if you look at the 61, prices have rebounded off it twice before. So this is quite a big support level since prices have tested this level in the past. Okay. Okay. Now, I think that's all the levels we have. Yeah, I think that's all the levels we have. So, um, I'm just gonna highlight this support level here. because once again, it's a confluence area, and you can expect prices to maybe bounce off this area, like I mentioned, because of the previous two bounces, or price reacted twice off this support level. Um, but let's see. I'm expecting prices to continue towards the second support as well. Okay, but let's look at some indicators. Same thing, I'm starting with Ichimoku and MACD. Uh, Here you can see price moving below the cloud. MACD also giving us a bearish signal. So that supports our analysis. EMA, SMA, and Bollinger Bands. You can see price pushing below that lower band. Let me hide our Bollinger Band for now so we can see that EMA and SMA. Can see prices moving below both indicators, so that does support. Let's also look at RSI and stochastic. Okay, RSI, you can see prices are moving in this descending trend line. I don't think we have the same trend line here. Not really, because it's cutting that. But mm, but you can definitely see that prices are are moving downwards. Not prices, but the stochastic indicator, right? It's moving into the oversold regions, but it's not quite in the oversold regions yet. Okay, so we can still expect prices to continue pushing downwards a little bit more. But like I said, I am expecting prices to rebound a little bit off that first support. And this is where pushing it into the oversold regions, we might see that rebound. Okay, so overall, it does still support our analysis. Okay. Any questions? Okay, now let's look at our US 100. Okay, so US 100 on our weekly time frame, you can see prices generally dropping, although recently we did see this spike up. Yeah, we can see that here. This was in the past week because of the pause in the tariffs. Now let's go ahead and continue with our analysis. So here I'm going to place a first resistance since price hasn't surpassed that level yet. So it's still considered a resistance. Okay, I think we'll place our first support maybe here at this window here. And you can see it's also an overlap level. There are a couple of swing lows and swing highs that line up here. So this is my first support. And then for my second resistance, I'll place it over here. Okay, next going in with our Fibonacci levels again. So I'm going in firstly with a retracement. Okay, you can see my 50% lines up. The 61 doesn't quite line up. So I'm not going to use that. I'll just keep that 50% here. Okay, and okay, I'm going in with another projection. Okay, you can see that 78.6 lines up with our first resistance here. I think that's all the levels we have here. I think we have another retracement here. 78.6 lines up. Yeah, I think that's all the levels we have. Do you guys see any other Fibonacci levels? I think that's all. Okay, so now let's go straight into our. Actually, since this is still pretty volatile, I'm just gonna add a second support below. Okay, because prices are pretty volatile on our US 100 right now. So I'm just gonna give a second support below that. And I'm also, let me just find some Fibonacci levels to line up with that. So 78, mm, okay, we can go all the way down for a retracement, and you can see that 50% lines up nicely. So I'll keep that 50. I think we also have an inverted Nike tick here. Okay, that 127, I'm gonna keep that. Okay, so I'm giving you another second support simply because you can see there isn't really an overall trend right now, and it's quite um yeah, it's quite volatile. So here you can see prices generally falling. That's the overall direction, but at the same time, um, there can be announcements that will push prices upwards. So I'm just gonna highlight the key levels for you to take note of right now. Here we have a very big confluence area at our first resistance. This is quite a big confluence area here. You can see price has reacted off this level many times before, and we also have a couple of Fibonacci levels that line up there. Okay, if you're expecting it to continue to drop, which you can see prices have already begun to fall back downwards, then you can ex you can continue to go in for a sell towards our second support, um, which is also quite a big support area here. Okay, so both of these areas tend to attract price since you can see our first resistance prices reacted off of it. Second support, we have two swing lows here. Okay, especially this recent jump, um, literally last week, up from this level here. So chances are we can expect it to continue to fall back down to that level. But again, depending on any announcements. Okay, so let's look at some indicators again. Prices are moving below the cloud, and MACD is giving us a bearish signal, so that both supports our analysis. Let's also look at Bollinger Bands, EMA, and SMA. These are just the indicators that I like to use because I think they're very easy to use, and also they use um different techniques, I suppose. Um, Here obviously our moving averages use moving average. Ichimoku, you can see it's telling us the trend, and later on when we use RSI and stochastic, these are both momentum based indicators. Okay. Um, but yeah, feel free to use whichever other indicators you want. Bollinger Bands aren't really telling us right now. They're kind of floating in the middle, so I'm not going to use that. EMA and SMA, you can see they're not really giving us a very clear signal right now as well, so I'm going to hide that as well. Now with RSI and stochastic, they aren't quite telling us much right now. You can see prices are generally, not prices, but the indicators are generally moving upwards. Okay, so that, or at least for stochastic, it's moving upwards. Let's see if we have any divergences. It's not really telling us much right now. Because we do have a divergence here. Okay, this is applicable on the stochastic as well. But okay, here as well. But you can already see that prices have already bounced upwards. So that's not really applicable right now. Okay, doesn't really tell us much. Okay, so like I said, I think um I'm expecting it to continue to fall towards our second support, or at least to that first support. We might see a bit of a um bounce or reaction off of this first support, since it is quite a big, well, it's an overlap level, but it's not a confluence level since there are no Fibonacci levels there. Um, but yeah, so I'm expecting maybe a little bit of reaction of that first support before it continues to fall back. to this position here. Okay, but of course, keep an eye out and stay updated with the with your fundamentals. Okay, let's now look at gold. Just give me 1 second. Okay. So now weekly time frame. So same thing, I'm starting off with higher time frame. You can see prices generally moving in an uptrend, daily time frame as well. So now I think you guys can already see that Nike tick formation here. Okay, so and I'm also going in with a Fibonacci projection. Okay, you can kind of already see how nicely these levels line up. So these levels are really nice to use for your support and resistance, which is exactly what we're doing here. So my second, actually this will be our first support. And then for my first resistance, I'll place it here. And my second resistance just at this level here. Okay, you can see how nicely those projections and extensions look. Okay, now I'm going in with a retracement. Okay, my 23.6 lines up with our first support. Okay, I think that's all the levels that we have here. So jumping right into our indicators. Is this too dark? Okay, so let's look at our indicators now, and you can see prices moving above the cloud, MACD giving us a bullish signal. Let's look at Bollinger Bands, EMA, SMA, RSI, and stochastic. Okay, you can see prices pushing above the upper band for Bollinger Bands. EMA and SMA, they are also moving above both of the indicators. Now with our RSI and stochastic, okay, that's not really telling us much. Except that we can definitely see prices kind of moving into the overbought regions a little bit. So you might see a bit of reversal here, especially since this is quite this is a confluence area. Okay, we've identified that 78 and also that 127. So again, we might see a bit of reversal before it pushes back up. Okay, Same thing for our stochastic as well. Okay, so that was gold. We still have 10 more minutes, so I think I will go through um I'll go through Apple. Okay. Okay, so if we look at Apple, we can see prices have fallen quite a bit with a recent rebound again from the tariffs or the announcements from the tariffs. So here we're going in with our first resistance. Um, okay, second resistance here. And first resistance just here. Oh, sorry, first support. Okay, now going in with our retracements. Okay, you can see that 61 and 38 line up. 30, 38 and 68, 61. Mm, no. Okay, I don't think we have any more levels here. As in any more Fibonacci levels. No. Mm, okay, I don't think there are any other levels. But let's go in with our indicators again. Okay, prices are moving below the cloud. MACD is giving us a bearish signal. Bollinger Bands. Oh, Bollinger Bands aren't really telling us much because you can see prices recently rebounded off the edge of our Bollinger Band. Okay, so it doesn't really give us any strong signals right now. Okay, but you can still see prices moving below EMA and SMA. Let's look at RSI and stochastic, and you can see RSI moving in a descending trend line. Okay, so again, pretty bearish signals. Stochastic. Stochastic isn't it's not really telling us much here. Because here we have the divergence, right? But prices have already shot up slightly. So that's already been done. So it's not really telling us much now. Okay, so I'm expecting prices to maybe rebound off of our first resistance towards our first support. Let me also add a second support just at this swing low here. Okay, so you can wait for prices to break out of that first support before continuing with the sell, or you can place a partial profit here at your first support. That's entirely up to you. Just giving you some options on where to place your orders or some levels to take note of, I guess. Okay, so that is for Apple. Okay, and that is all the time we have for today. Are there any remaining questions? Okay, if not, yeah, thank you guys so much for joining me today. I hope you guys found this session helpful. Have a great rest of your week, and I will see you guys again soon. Thanks, everyone. Bye. Thanks, everyone.